earnings corner then, and that comes from the banking space. HDFC Bank posted a 20% rise in profits for the 10th straight quarter on the back of strong operating profits and growth. Asset quality, however, worsened marginally. Gross NPAs were up 11%, a big jump by the bank's standards. However, bad loans remain one of the lowest in the industry. CNBC TV 18's Ritu Singh reports on the bank's third quarter performance. Here's that report.
Aditipuri's HDFC Bank has done it again. The country's second largest private sector lender met street expectations with a 20% rise in profits for the 10th straight quarter, aided by a strong growth in operating profits, other income and net interest income, despite a higher tax outgo.
We've actually seen that the better placed companies in most sectors continue to see at least working capital growth. Clearly, we haven't yet seen any huge pickup in capex related lending, and I think if you look at the investment numbers, that's not very surprising.
For the quarter ended December, HDFC Bank posted a 24% rise in net interest income, aided by a 26% growth in advances. Margins rose sequentially to 4.3% this quarter from 4.2% in the previous one, and provisions fell 4% over the previous quarter at 654 crore rupees. The bank's restructured book remained flat at 0.1% of advances. Asset quality, however, clearly worsened, with gross NPAs at 0.97% and net NPAs at 0.29% for this quarter.
We saw some increase in agri NPLs, some increase in business banking, which is SME. There was a little bit of a change in the method of calculation of NPLs for credit cards, because the date from which you start the 90-day calculation has been changed because of regulatory definition there. So all of these contributed to that increase of 6 basis points in this quarter.
The management also clarified that there was a negligible impact of RBI's asset quality review on the bank. A 0.97% gross non-performing asset ratio is clearly a figure few of its peers can boast of. Yet, the stock is priced at double the valuation of its nearest competitor, partially because of its excellent asset quality, and hence an 11% jump in gross bad loans in one quarter from HDFC Bank is a shock. It should prepare investors for more trouble in other banks. In Mumbai, Ritu Singh.